How's the market? Today we're talking about the two-sided coin of low interest rates and the record amount of equity for homeowners today.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey, what's up guys? It's Sam Hartman, keeping it real estate here in Fort Wayne, Indiana. And thank you again for joining me today, where we talk about the most common question I get, how's the market? And so each week we try to break apart a piece of the real estate market, dive a little deeper, give a little more context, and try to create some clarity for you as consumers so that you can make great real estate decisions out there in the real estate market. And so this particular video is more geared towards homeowners and potential home sellers out there, because we're gonna talk about some of the challenges homeowners face in today's real estate market, but also one of the greatest opportunities. And so first and foremost, one of the greatest challenge that current homeowners are facing, and it's a two-sided coin, is the golden handcuffs that they have strapped on their hands due to low interest rates. Most current homeowners, over 70% of homeowners with mortgages, have an interest rate lower than 4%. And so that 70%, these are the key demographic of homeowners that feel trapped in their current home. Maybe they have life circumstances where they want to move, but they really feel the effects of those golden handcuffs of the low interest rate. Now, I want to point out that people always make changes in life. The 5 Ds of decision-making factors in real estate are diamonds, diapers, diplomas, divorce, and death. Those are the 5 Ds that typically cause or lead to some sort of a life transition that results in people buying or selling real estate. And so these sellers feel handcuffed. Maybe they're even going through these life decisions, but they feel handcuffs to their mortgage rate, to their lower payment in housing, and they feel like they can't make a move. But we're gonna talk about later in this video the great opportunity that is the equity in their home that can help homeowners make a move if life is pushing them in that direction. Last week we talked all about housing inventory and how the lower number of listings hitting the market is one of 3 key factors in keeping housing inventory low. And so these graphs just further show that data, that these locked in sellers, these sellers that feel like they can't make a move, are keeping that listing inventory low. Because if we look back to our last, what we would consider 3 more normalized real estate markets, the 2017, 18, 19 pre-pandemic real estate markets, you see that 2023 is much, much lower in the listing inventory in all accounts. So whether it's new listing count in August, active listing count, or the total listing count, all of those are substantially lower than those more normalized years of 2017, 2018, and 2019. But there might be some good news on the horizon. Realtor.com has this quote that I'll read here, and we'll look at a graph that shows this data further. While inventory continues to be in short supply, August witnessed an unusual uptick in newly listed homes compared to July, hopefully signaling a return in seller activity heading toward the fall season, which typically is the best time to buy a home. And so let's look at this line graph. This is the last 7 years of listing data mapped out from month to month, and it shows the seasonality of listing inventory, of when new listings hit the market. And so most of those years are peaking right around May to June. We kind of put an asterisk next to that orange line because that was the year of COVID. So you can see the drastic dip and then the drastic rise. But let's look at the blue line here. And the blue line is 2023. And you can see how much lower that blue line is than all of those other years and what we kind of see as typical average listings that we're taking year over year. But if you noticed, we had a little bit of a blip in the seasonality to new listing inventory in August, where we started to see this curve kind of start its seasonality downward trend for the fall market. August actually saw an uptick in listings. So is this trend going to continue? I don't know for sure, but what I think this is saying is that sellers are having enough. The sellers that have been feeling handcuffed, feeling tied to their property, feeling tied to their interest rate, have said, this is enough. Interest rates have been over 7% for over a year now at this point, and they're tired and they're ready to make the life transition that they've had on hold for long enough. So we're starting to see this uptick here going into the fall. Is it a trend that's going to continue? I don't know for sure, but we will certainly continue to monitor it. But even with this uptick away from the normal seasonality of new listings, we are still far, far away from taking on what normal amounts of listings we might be expecting in the summer and going into the fall months. But like I said before, these sellers are probably experiencing the pain or the pleasure that pushes real estate decisions. We call those the 5 Ds of real estate decisions. And again, they are diamonds, diapers, diplomas, divorce, and death. Not all of them are warm and fuzzy things. Some of them are bad and negative things, but those are the types of pain and pleasure life happenings that push people into those real estate decisions. And I think sellers who have been on the sidelines for long enough are starting to say, it's time to start taking the next steps, regardless of where interest rates are today. And so Credit Karma actually did a survey of home sellers, of homeowners, to see what is the sentiment of homeowners with the elevated interest rates. And 26%, that's almost 1 in 4 homeowners, say that the elevated interest rates would not affect their decision whether they want to sell their home. And of that 26%, almost half of them said that it wouldn't affect them because they wouldn't need a mortgage on their home. They would be able to buy the home cash. And that is what is going to lead me right into the biggest and best opportunity that sellers have in today's market, even with elevated interest rates, even if you're feeling the golden handcuffs of the low interest rate that you may have. And that benefit and that advantage to home sellers is the home equity that you have in your current home and your current investment. Americans are sitting on an absolutely tremendous amount of equity in their homes. And I have this great pie chart that's going to show that data and really drive home the point that and the opportunity that homeowners have in today's real estate market. 38.7% of homeowners own their home free and clear. That means they have no mortgage. They make no monthly payment to the bank man. They are sitting free and clear. They're paying their taxes. They're paying their insurance. And so when they go to sell their home, they have this amazing asset that they can leverage and help buy their next home with no down payment or putting such a large sum down that they aren't going to really worry about where interest rates are because they're not going to finance a large piece of that puzzle. Another 30% of homeowners have 50% or more of equity in their home. And so maybe they don't own their home free and clear, but they have a good chunk of money sitting in their house like a savings account that they can leverage to help make that life transition a reality. 20.8% of homeowners have between 10 and 30% equity. And then we get down into 20.8% of homeowners have between 30 and 50% equity. 8.6% have between 10 and 30% equity. And then check out those really, really small slivers of 0 to 10% and even negative equity. Those are the homeowners that are possibly at risk of foreclosure. But look at that small number. This is always a graph that I look at when people bring up the potential of foreclosures, more foreclosures hitting the market, or fear of foreclosures hitting the market. Look at this small piece of the pie that is really at risk. almost every homeowner on this graph can afford to sell their house, put money in their pocket, and make a new life transition if they got into financial trouble. Only 0.12% of those homeowners are in negative equity with their home. So this further paints the picture of the tremendous amount of equity that homeowners have in today's market. And so we're talking about percentages, but let's look at a quote from Selma Hepp, the chief economist with CoreLogic, that puts that percentage into a dollar figure for you. The average US homeowner now has more than $274,000 in equity, up significantly from the $182,000 before the pandemic. So that takes those percentages and it puts a number to it, $247,000. Now maybe that's not enough to buy the house that you want to buy with cash, but it is a tremendous amount to put down as a down payment on a property to avoid the additional monthly expenses like mortgage insurance or higher interest rates due to being a riskier borrower. These are the opportunities that homeowners have if they need to make those life transitions. Now I want to look at a quote from Black Knight Monthly Mortgage Monitor, and I think this quote really helps paint the picture of the health of the current homeowner in today's market. And so this says from 2010 to 2021, mortgage holders withdrew just under 1% of the available tappable equity each quarter on average. So let's pause there. So about 1% of the tappable equity was being used by homeowners. That means they were maybe taking out a home equity line of credit. They were maybe leveraging their home as an asset to purchase other assets. And that is a great number because that number, 1%, is much, much lower than the number of tappable equity being utilized leading up to the housing crash. So that tells me homeowners in today's market are being much more responsible with their home as an asset and not using it to over leverage themselves to buy depreciating assets or to spend frivolously or to take lavish or expensive vacations. And that is a great sign for our current real estate market going forward as well. But here's an even better stat. Over the last 3 quarters, that share has actually fallen from 1% to 0.4%, which suggests that there's nearly $200 billion left in equity in our housing market today. What an amazing opportunity for homeowners. $200 billion in equity that they can leverage when interest rates are high, both for homes and for borrowing, really for any lending that you want to take money out on, whether it's a business loan or a car loan or a mortgage. You have the amazing amount of tappable equity to leverage to borrow at an affordable, lower cost rate and percentage to you as a homeowner. So again, I just like to further look at the data, at the numbers, at the percentages that kind of just show home sellers that are in such a great situation in today's market. And if we look back over the last 5 years, this is average appreciation. How much equity, how much appreciation your home has had across the country. And you see in Indiana, you would have, if you've owned a home for the last 5 years, your home would have appreciated on average 61.9%. And the national average is actually 57.3% all across the board. So a lot of people, when they look at home prices, they're just shocked about how quickly home prices have risen. But this paints that picture of why prices are where they are. It doesn't matter that the home only sold 5 years ago. Prices have appreciated substantially over those 5 years. And let's go back even further. And this isn't to paint any picture other than the health of a real estate investment. Not only do you get to live in your home and customize your home and enjoy your home, but we're going to look at this same graph, but going all the way back to 1991. And so the national average of home price appreciation from 1991 to today is almost 300%. So when buyers are wondering, is now a good time to buy a home, all I can tell you is this. If your timeline is on the right horizon, if you live in your home and you own your home long enough, you can't lose with real estate. Every decade is positive appreciation. If you're gonna be in a home for 10 years, you can't lose in real estate. And this graph from 1991, I know the best time to have bought real estate is 30 years ago. The next best time is today. So if you wanna start building equity and start being a homeowner and having the opportunities that homeowners have today in your life, look at these graphs, look at this data, and ask yourself, can I be in this home for 5 to 10 to even 30 years, and look at the benefits that you can reap from paying your balance of your mortgage down and the market appreciating in value. Just a tremendous opportunity to be a homeowner and to use your home as a safety net, as a savings account, but also to enjoy the hell out of, to grow and make memories with your family in. Don't forget all of those intrinsic values of home ownership as well. We talk a lot about the numbers and the dollars and cents, and does it make sense to buy a home in today's market? We talk a lot about that, but the biggest, most important thing for people in buying a home is, does it fit my family's needs? Does it fit my needs today? Is it something that we can grow in, laugh in, make memories in? So don't ever forget about those important intrinsic values in owning a home. So let's review the 3 biggest key advantages and opportunities that home sellers have in today's market. And so for one, homeowners have the ability to be an all cash buyer. Remember, almost 40% of homeowners don't have a mortgage on their home. That means that they can leverage their home as an asset to then pay cash for their next home. That's a tremendous opportunity that homeowners have in today's market. But maybe if you don't own your home outright, there was still a large chunk of that pie that own more than 50% equity in their home as well. So one thing that I would always tell sellers, if you're curious, reach out to me and I will help prepare a home equity report for you. What is the equity you have in your home? What could I leverage to make a move? What are the opportunities there? Always ask those questions. I am happy to help you get that right information and to make an informed decision for you and your family. Number 2 advantage for a homeowner with the tremendous amount of equity that they have is the ability to put a larger down payment down. So maybe you don't have enough to buy the next home cash. That's okay. You probably have enough sitting in your home that would allow you to do a 20% down payment, which makes your home more affordable because you're going to get a better interest rate and you're not going to pay mortgage insurance on your payment every month. So those are 2 big things that are going to affect that monthly payment, that even though interest rates are higher today, are going to help make that monthly payment more affordable for you when you make that transition. And then third, not everyone is going to buy a home when they sell. A lot of the population is aging and might be looking at some different housing opportunities like assisted living or senior housing. And all of those have different types of rents or buy-in programs and things like that. So the equity in your home can help give you a head start in being able to afford and pay for that assisted living or that longer term plan in your later stages. So I think the key that I want to focus on here today is that home sellers, although some feel trapped with their low interest rate, 4% or below. Remember, 71% of mortgaged houses have an interest rate of 4% or less. Those home sellers feel trapped, but don't be discouraged because you have an amazing asset and opportunity in the equity in your home. And if you're curious about what the equity is in your home or what the opportunities might be for you as a homeowner making a life transition, reach out to me, let me know. I'd be happy to help prepare a home equity report for you and help you plan those next steps that would make the most sense for you and your family. I hope this information has been valuable today, guys. Again, I'm Sam Hartman, keeping it real estate, and don't ever hesitate to reach out and ask, how's the market?
I keep it real, just keep it real.